Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Good, thank you. Appreciate jumping on here tonight. Sounds like your voice has improved a lot.
It is.
Good
I got
stuff.
some vitamin recommendations from a friend, so trying to stay healthy.
All right. Well, it was a very eventful week last week, culminating in Expiration Friday. We had quite a rally on Friday. That was pretty neat to see. Usually expirations are kind of like we gap, and then that could be all she wrote, and then it gets pretty quiet. But the Russell opened up slightly. The Dow Jones, S&P 500, and Nasdaq 100 opened down slightly, but they were able to all rally and have some pretty good performance for the day, pulling the performance the week up substantially. I think the SPY ended up 4.74% for the week. So there we go. Now that puts us into consideration for, do they think the bottom's in? Do they want to build on this? What do we have coming up here? So we've got to look at our end of month seasonality. How does typically October play out? Are there any contrast to that? So any macro themes that oppose that or complement that? We have to then look forward to November and the upcoming elections on November the 8th. So lots going on here. So why don't you take it away there, Dave, and give us a little bit of context for the groups?
Sure. Yeah. So October's almost over. We start the last 5 days of the month on Tuesday. So 4 days of this week and then 1 day in the following week. And for October,
which is Halloween, Halloween Monday. Yeah.
See how scary that becomes for the markets. But October for the SPDR is expected to do 0.79% for the entire month. But the last 5 days of the month is pretty soft, minus 0.03%. So not much performance in the final couple days of the month, the 5 days. It seems to have peaked out at mid-month seasonality, which was pretty good. And then the options expiration turned out to be pretty good too for the market. So we are kind of coming in from a premium perspective to this week and expecting a softer week. So and within that too, the small caps are expected to underperform as well, minus 0.29% for the final 5 days, with the Nasdaq being a little bit stronger, positive 0.4%. So within that, let's look at the sectors that are expected to do the best. To be longer, things like financials, the KRE expected to do 1.02%. XLF is positive as well. And some of the chip stocks, SMH 0.93%. Technology, so the Qs, XLK, ARK-K, these are expected to be a little bit better as longs. And on the shorter side, the metals, gold, GDXJ expected to do really poorly, minus 6.2%. GDX minus 4%, silver minus 2%. So GLD, IAU, all the gold and silver seem to be positioned to be pretty weak the final 5 days. Also oil tends to be weak the final 5 days of October, as well as some of the biotech and industrial. So there are some sector plays there for the final 5 days. And then we do have some economic news and reports coming out. Monday, it's a lot of focus on manufacturing PMI. Tuesday, we can expect some home price data, the Case-Shiller home price index. Wednesday, new home sales. So that could occupy people's minds for the week. And then on Thursday, jobless claims. And Friday, more information about employment and core PCE. So a mixture of inflation, housing data, but there is a lot of earnings this week. If you look at the earnings calendar, so whatever you trade, I guess you have to really vet out your symbols in the morning based on the earnings that are pre-market or post. But some of the notable ones are Monday, HSBC. Tuesday begins a lot of the FANG earnings. We've got Microsoft, Google, Visa, Coke, and Texas Instruments as well. Wednesday, Meta is a big one, and Boeing. And Thursday should be a big one. Apple, Amazon, MasterCard, then Intel, Starbucks, Caterpillar, Merck. And Friday, some of the oils, ExxonMobil, Chevron, AbbVie. So it's a mixture of data coming out. So things could move the market, but it's expected to be a little bit softer based on the almanac.
Okay. Well, looking at the futures here, we had the Dow Jones futures have been performing better than the S&P, NASDAQ, or the Russell. I mean, they're way off the bottom compared to those two. You know, if you were to just look at the performance overall, which means they're, you know, recently with such volatility and concerns on the macro level, plus some softness through October, we saw that there was that flight to, you know, the bigger and better blue chips. And then when the futures opened today at 6 p.m. Eastern time, they shot up and they've pulled back to kind of almost where they closed on Friday. So they're up 92 points now, or 0.3% for the Dow futures. S&P 500 is up 13.5 points, up 0.36. NASDAQ is up 56 points, a little bit better at 0.49%. All of them have that same common pop at 6 p.m. Eastern time, and then they've pulled back. Russell is up 5.5 points, or 0.31%. And the VIX is down slightly at 2980. Now, energy had an initial pop as well, and it's kind of given all that back. So it's actually down 0.24 points, or 0.28% for WTI. Brent is down 0.32%. So yeah, it might be interesting, you know, looking at that seasonality if we see some weakness, because we've had a pretty good run on energy recently. If I pull back on the daily there, we did have that run from the beginning of October on up to October 10th, and then pulled back a little bit and then up again a few days. So it's still, you know, not a massive bullish case at the moment. Looking at gold, I was interested in what you said there, Dave, with GDXJ, and that's the junior miners, and GDX was the senior miners. And it had looked like we'd kind of hit a matching low there on gold and silver. So we had a low in September towards the end, and then we kind of just tagged it and popped up. And Friday the metals did really well. So, you know, I was kind of wondering, well, is that indicative of, you know, a bottom being put in, and now maybe the prospects, you know, since we kind of have the Fed's playbook, you know, we know what they're going to do in November, and then the market's kind of looking at maybe they'll hold back a little bit. That was the speculation on Friday, right? Is like maybe, you know, December will only be a quarter, maybe 50, but maybe the future landscape is they're not going to be as hawkish, and so we rallied on that information, right? So and the reason that sets itself up for being like that is the debate that's going on within the FOMC. There is some that are more hawkish and some that are, you know, saying, well, we don't want to kill the economy with our rate hikes. So it's kind of some tension there, which means there might not be as an aggressive or as long duration as, you know, what was being thought prior to Friday. That's all I can say. So anyway, I thought gold might might be able to rally a little bit more, but if the mid-month seasonality is that terrible, then it's gonna be hard to overcome that, right? So,
Yeah.
anywho, interesting. Let's see what the bonds are doing here. That's been just a incredible decline since the high in August. That was just at the end of July, beginning of August, and we've just been steadily down. No relief in sight, and but we did have a big move down on Friday. Corresponding obviously to the big up move in the market, and so right now it's kind of a inside day developing. It is up a little bit. The 30-year is up 0.42%. The 10-year is up 0.36%. 5-year is up 0.29, and the 2-year is up 0.11. So across the board, bonds are up a little bit, which means a little bit less pressure on the interest rates there. So if the market wants to continue a rally, I was thinking about some of these short squeeze stocks. It's like you're already extremely discounted. Small caps have shown that they can, they definitely can pop. You don't have to have it across the board where all small caps are performing, but there are some that really have some amazing performance on any given day. So the question is, why and what? So I did a little screen that kind of came up here. So based on like days to cover, CORT, and if you want to look it up, if you have a computer handy, CORT, it's got a percent float. 18.74% of the float is short, which is fairly high. Daily average volume is 583,000, so it'd take 29.7 days to cover all the shorts. But it has been moving up all through October, and it's getting close to its 1-year high. I'm not recommending it. I'm just saying that find these short squeeze things something that you can watch and maybe participate in. WMK is another one. Now, there's nothing fabulous about the fundamentals or anything. This is Weiss Markets Consumer Defensive, actually, but it's rocketed up from October 10th till now. It's just been going straight up, and it's got 21.6 days to cover, and it trades pretty light volume, only 69,000. So it's got about 10% of the float is short. So you can do your own screens. FinViz is a good way to do it. You can look for things, and you can just take a look at how much of the float is short and look at the volume and rough it in terms of how many days to cover. But that's what can happen when you have like maybe a bottom is temporarily in. Traders are looking for opportunity, and they tend to pick on some of these stocks that have high short interest. So I just wanted to remind you of that. And small caps, again, under 10 billion market cap, both of those. And there's other ones. What was this one here? Tootsie Roll, Tootsie Roll Industries. It's short. It's got short float, 9.1%. Does pretty light volume as well, so it would be about 20 days to cover all the short. So yeah, pointing that out. Want to point out something else that I saw in one of Misha's articles was about the shipping. So it's really an interesting article if you can look for it, because we went from, you remember how many containers were in Long Beach, stacked up there waiting, well, the container ships waiting to off offload right in Los Angeles and Long Beach as well. So
It went from
before the
down to like 4. Yeah.
before the pandemic, so there was unusual for more than a few ships to wait for a berth, right? And then we soared to like 100, even 109, I think, ships were waiting. Well, of course, we had all the backup with containers and trucks and all that. Well, it's dropped all the way down since this time last year. So just in the 1 year, it's come all the way down to now there's only 4 ships waiting. And the prices of freight has dropped from 20,000 for a container down to 2,720. So 84% decline in the cost of shipping an average container. So think about that for a minute. Remember I've been warning that we will go from inflation to deflation very suddenly, very quickly. And so truckers are also starting to lose money. So there's bankruptcies already starting. I mean, this is how chaotic systems we've gone from, just in time delivery systems. We had a pandemic, shut the world down, and you got the world opens back up and nobody's prepared and things soar. And then you go to, excessive costs for lumber, excessive costs for metals, excessive costs for shipping, for trucking, for everything. And now you're seeing all of that implode down 84%. Think about that. And trucking now starting to lose money. So what is going on? I've got an echo now. You there?
I'm here. I just muted myself.
Oh, you had an echo going on. So yeah, see the dramatic changes that can happen, and so the macro is alive and well, but you need to adjust weekly. There's one session we talked about. I said, you have to really look at each week, kind of dial into what's happened, where things are at. Look at your charts, your leading indicators, look at the context, look at the macro, look at what the drivers are, and you have to almost reset weekly because that's the pace of change. And if you don't do that, you're going to get yourself, caught. So, back to the metals, they look like technically that, people might step in and start buying them, but we have the seasonality, negative for them for the month end. And we also have this concern about the dollar, and the dollar is still holding up okay. We haven't seen any dramatic change in it. I thought the yen, the Bank of Japan intervened on the yen, and I thought that it had an initial spike when they intervened, and it pulled all the way back. So again, it's could have been a massive signal, a massive change, but traders aren't convinced it. They popped it and then they pulled it all the way back. So it's back where it started. And so the US dollar is still hanging in there. So we're going to have to see a major change on the dollar to get the fire lit under these commodities, I think. And that includes metals as well as oil for the big picture. So. Okay, what else we got? Earnings, a whole bunch of them coming out. Why don't you talk about the economic reports?
Yeah, we have we did that a little earlier, but again, manufacturing is going to be in play. Home price indexes, Case-Shiller, new home sales. Thursday we have jobless claims, and then Friday focus on core PCE, some inflation data, and consumer sentiment. University of Michigan consumer sentiment comes out. So we get
Friday seems to be the bigger day regarding all of the inflation stuff, right?
Yeah. So and any reduction in the rate of inflation is going to be bullish for the market. So
Well, the last day of the month is usually down in October, and the first day of November is up, right? So could be interesting how that plays out. Turn of the month effect. And remember, small caps can take off in November. We've seen that movie before.
Last November, you got the whole month gain on that first.
I know it was one month of gain in one day. That's how good the small caps were. What would be nice if it repeats itself. And then yeah, so earnings. Just we've got a busy week of earnings still. We're still in the thick of it. Bank started it off, and then it's been continuing with some of the larger caps. And you just got to keep it on your calendar and know what's happening. Now, just because an earnings stock gaps down, significantly doesn't mean it stays down. I mean, some of those we see that movie sometimes where they gap down 5 or 10% and then they retrace it by the end of the day. So there's a big difference between close to close performance and open to close performance. And we tend to live with basket trading. We tend to live in the open to close environment. And so it's kind of a different world than the close to close. And then for pair trading as well, you kind of have a mix of both. Your swing trading plus you're using any anomalies from open to close that you can. Okay, anything else?
That's it for me.
Okay. Anything? Did you do any scouting for any lists so far for Monday? Anything pop out at you, or you got to do that after?
I haven't run the list yet, but
okay.
Out there.
All right. Well, Mondays are always a little bit challenging when you come into a new week. Sometimes you can get your sea legs a little bit better by Tuesday, but do the best you can and factor in a little bit that the futures are kind of saying they want to be up, but they were up higher and they pulled back, so they're not holding at the moment. So definitely check to see where they are according to fair value on CNBC's website, or Index ARB has fair value. See where they are in the morning, and again, be careful on what might be up a lot. Let's just say, for example, oil does cycle back and it's up a lot pre-market. It might pull back. Likewise, if it's down a lot pre-market, it might actually rally a bit. So watch for those outliers, because I find they can flip-flop on you. Sometimes it's safer in the let's say industrials are kind of in middle of the pack, or consumer staples or discretionaries middle of the pack. That's a lot safer sometimes than playing the groups that are either down the most or they're up the most pre-market. Have you noticed that, Dave? Sometimes the flip-flop you get there?
Yeah, totally.
Yeah, especially if you're doing market orders. If you're doing limit orders, you can usually curtail it somewhat, but that's just my observation is the two sectors that are up the most or the two sectors down the most sometimes can flip around and reverse from open to close. So keep that in mind, guys. All right, I'll let you guys go. Thanks again.
Good luck. Thanks.